All right, good morning, everyone. All right, let's get started. 1 second here. Let me switch over. Okay, so let's just quickly review yesterday. Um, the story of yesterday was clearly OCEA. All right, so let's just go over what happened with this stock. So, firstly, as you can see, prior to yesterday, this stock was basically doing nothing, right? Just drifting, 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 goes up, right? And then this was yesterday, and we had, good morning, everyone. We had this very sharp rise in price starting here, taking us from a starting price of about $6. And let's see, it was starting from 645, going to a high of 2660. Okay. Now, obviously, there's no way that we could have exploited the entire thing. Now, we were able to catch the starting of the day, that's for sure. So, entries should have occurred somewhere in the high $6, very low $7 range at the latest. Then it was halted once, and then it got halted several times as it went up. I mean, you had a halt here, 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 here. So basically, this stock was halted multiple times, and then eventually, after topping out, it sold off. Now we had multiple targets for this stock. These targets were mostly set based upon previous activity from the stock. So, looking at previous ranges that it traded in, previous swing highs that it had. But once it passed 1422, which was the all-time high for the stock, as I mentioned, we're in no man's land. And what was very important about this, when you're trading this, as I mentioned, is that once you're outside of any boundaries that the market has set for the stock, in other words, there's no projected top, volatility because this doesn't have options. So there's no way for me to gauge what type of volatility is being projected for the stock. Okay, no options data. No valuation data, no analyst targets, nothing. It was just bottom line. Once we're past a certain point, there was no further information to use. So the distance the stock will go up from there would ultimately depend on what the market is willing to do at the time. Now, I also mentioned that eventually this stock would get halted in such a way that when it reopened, it would cut its price very sharply. Now, this is a tactic that's used by uh, the exchanges to basically squash the buyer's frenzy. In other words, a lot of people start buying in, usually with any trend that goes up this sharply. Usually, most of the trades come in at the end, right? So if it keeps going, gradually the trades will increase. But either way, even if the exchange never intervened, at some point the stock would have to collapse. But the problem is that when you look at how positions are accounted for in the market, they're not based upon your P&L is not based upon how many shares of the stock were traded at a particular price. It's based upon what was the last price traded. So even if one single share is traded, that's enough to change your P&L. So in short, even if the move up, as you can see, the volume was sharply declining here as the stock was moving up. In other words, most of the trading volume was in the first three bars. Then after that, it quickly diminished. So by the time we got to the one, two, three, four, fifth bar, we had the volume sharply lower and then even lower still. So my point is, during this really rapid move up, the amount of people actually participating in that rally, as far as the number of shares traded, was actually lower. So even though usually you get a much larger number of trades coming in at the towards the end, in this case you had much more trades coming in at the beginning. So for the most part, once the stock was halted several times, the majority of the movement that occurred after that was on very thin activity, relatively speaking. So eventually that was going to dry out anyway. So as I mentioned, as you're hitting targets, once you get to a certain point, you should be getting out of the vast majority of your position. I recommended at least 80% of the shares being sold by the time we got to 1422. After that, I said if you leave a little bit in, it's just a matter of waiting to see where they pull the plug. But once they do pull the plug, it's not going to be something where you can get out here, or there. You did have one brief moment to get out here. This move here did not last very long. When the market reopened, when they halted and they reopened, you only had basically seconds to get out. And if you didn't get out during that move, that first halt after that declined, where they opened it lower than where it previously closed. If you didn't get out there, your next exit was down here when it reopened. So there was no possibility of exiting in this gap between this red bar here and that red bar there, because there was no trading that occurred in between them. This is an important concept. Just because you have a stop loss doesn't mean, if you have a stop loss, let's say at $21, and you're thinking, well, if it hits $21, I'm going to get out there. Nope. As long as $21 was traded, then you have a chance of getting out there. But if no one's trading, if they're not letting you trade that price, but they're forcing it to reopen at $16.76, that's where you'll have your first chance to actually get out. So in short, if you miss this exit here, your final exit there, you had no chance to get out until you got till here. So it's very important to remember that. This is why I warn everyone, do not get into this once it had already gotten too far away. And it wasn't way up here. My warning to not get in was way down here. It already, after the first halt, when it reopened after the very first halt, that was the last time you had a chance to get in. If you try to get in after that, in this case, it worked out. But in many other scenarios, it won't work out. In fact, the vast majority of the time, if you try to get in after the first halt, if you try to get in, it halts first, then it reopens, you get in then, that's one thing. But if you try to get in after the third halt, or the second halt, I should say, then you have a problem, right? The first halt, okay, that's worth taking a shot, I guess. But the second time it halts, no. After that point, you don't get in. If you already have it, you just wait and see how far it can go, because you're already in a profit, and there's a potential it can go a lot higher. But the key is not to lose money. Okay, that's the most important thing. Instead of obsessing about what I should have made if I stayed in, remember that the main thing is not to lose money. That's first, right? So if you're getting into a situation where you're already up and you can take out profits, that's one thing. But if you're just getting in and you have no profit on the table, and you know that at some point this is all going to end, and you don't know where, then you can't say that it's the same risk to reward. It's not. Okay, so in short, you have the beginning to get in. You have after the first halt, when it reopens, you can also get in. But you have to be willing to get out quickly. And as I mentioned, the exit was the high, or the closing price, I should say, of the bar where the halt first occurred. So the first halt was at, I think, $7 and, I don't know, 7 something. They halted it at, I think, 737 or something like that. So when it reopened, as long as the stock didn't start trading below 737, you're still in the game. So if you got in wherever it gapped open, as long as it didn't come down below that, you're fine. You just wait. But if it doesn't go up, then you get out. Okay. So long story short, that's what we got. Okay. So I just wanted to spend some time on this particular stock to discuss it because I know that whenever this happens, I'll have two sets of results. One set of people will do very well on it, and others will do very poorly. And the difference is always the people who do well are the ones who took action sooner, took the chance, and the people who do poorly were the ones who were just shaking their heads. There's no way it's going to keep going. And then as soon as they see it get up to here, then they get it. And in some cases, you may, if you got in here, you might have been able to exit at a profit. But if you didn't get out either here or there, by the time you got to there, you're actually under where you got in. So you're guaranteed to lose because here we never got back to the opening price of this bar here, right? So short, this is something you have to expect to happen. So really great opportunity if you did it during the time frames that I was mentioning to do it while it was happening. If you try to get in later, as I warned you not to, you may have made money. And if you did, count yourself lucky, but don't do it again. All right. Now, Lucid, LCID was a great opportunity yesterday. The markets were mostly bearish. So let's kind of look at what happened. So we had a lot of stocks that were going down. And as I've mentioned, short selling is something that you want to be careful with because usually when you short sell, there are always buyers waiting to get in. I have to emphasize that. There's always going to be buyers that want to get into most stocks. Not all stocks, but most stocks. So when a stock starts to go down, certain people, certain groups that look to buy when stocks are down, which is the logical thing for them to do if they're long-term investors, they should buy when the stocks are coming down, not when the stocks are on highs. So that we already know they're waiting. So unless you've got some really bad news about a company, something bad enough to keep it trending down, it's usually not worth trying to go short on lows. Now, Lucid did have one thing that was working against it, which was it had earnings that came out, and those earnings, which came out the day before yesterday, they didn't come out positive, and therefore the stock already had a bias to the downside. Now, this stock actually did go down quite a bit. Then after that, it bottomed out and it switched and went in the other direction. Now, this exact setup is something you can look for because it happens a lot. A lot of times you'll have a stock that's really bearish at first, and then after a while of going down, then it starts to go up. Why? Because the people who wanted to sell, they were selling this entire time, but there were obviously other people who were buying at that time from the sellers. But after a while, if the buyers are still motivated, they may continue to buy, but this time they're going to be buying other people's offers, other people's asks, thus moving the price up. So therefore, all that happened here is that you had a transition from bearish to slightly bullish. The stock didn't go up to where it was before. All it did was go down long enough to give you a transitional move. So before I took my middle of the day break, I mentioned to watch mostly for stocks that were down but are starting to go back up because those are going to be the ones that offer the best opportunity. And sure enough, that's what happened. So this wasn't the only example. We had quite a few other stocks that did the same thing. Rivian also did the same thing. Okay, although these are two related stocks, but generally speaking, if you just randomly looked around, you would see a lot of stocks that went down and reversed. So hopefully, a lot of you were watching for that as I advised, and then we're able to find some opportunities like these. Again, you could literally have looked across the market, found lots of opportunities like that. All right, so let's look at some other stocks that were moving yesterday. So we had NVIDIA. NVIDIA looked like it was going to keep going up. There was a target, I believe it was 240 or so. So at first the stock slumped and it gapped higher after earnings, but then after that earnings, positive earnings results, it slumped first and then it started to rise. That's fairly normal. A lot of times stocks that jump quite a bit on earnings, they'll slump at first and they'll start to go up later. So you do have to watch for that they'll usually start first 5 minutes, they're kind of fishing around they'll dip for a bit and then go back up. It's not typical after a big jump overnight from earnings that a stock just keeps going up right at the bell. Usually it pauses for some period of time and starts to go up. So we did catch Nvidia as it was starting to go up, but it never actually went to the target. Then it slumped later, then gradually came back. But for the most part, that the stock, it didn't really sell off like a lot of other stocks did, but it didn't really do much else. So there were opportunities there, but they were very brief. Um, VTRS looked like it might get some momentum. It wasn't a very high volume trading stock at the time. So we did look at that as an opportunity, but unfortunately it never played out. So here's the first part of the move, which we didn't really catch that. It was like I said, the volume was too low. So it didn't really show up until around here. And then at that point I was looking for it to pause and then continue, but it didn't. Sorry about that. Looks like the connection disconnected. Not sure what happened there. So again, VTRS gradually went up later. So this one wasn't the best opportunity. There are others like Paramount, which was at first going up, looked good. Then it turned the corner and went down. So here's Paramount, looking like it's going to go up for a bit, but then got really choppy. So after a while, not much we could do with it. So left it alone. It sells off, and then it has its recovery too. And then from here to there, pretty clean move. Not a lot of not a lot of movement, but pretty clean. So for the most part, yesterday it was either you had something at the open. If you were a short seller, you would sell early for any stocks that looked a little bearish, and then at the middle of the day when things start to rebound, you had your other opportunity to get in. So for the most part, yesterday did provide lots of good opportunities. Lots of stocks that had really large moves in one direction and large moves in another. So as long as you were just paying attention to what was happening, most likely you did well. All right, so let's look at what's happening pre-market. Today, um, let's see. Just going to first look at the watch list here, see what's moving. And so far, it doesn't look like much is moving at all. These volumes are all very low. Okay, so I'm not really seeing a lot on our existing watch list. I mean, Tesla's always trading with volume, but that's a given. So as of right now, I don't see much of interest. Lucid's a little active, but I don't think it's active enough. So again, as of right now, uh, maybe Lucid, maybe Wish. Let's see what's going on with Wish. All right, 758. No, nothing there. No chance on Wish. OCEA might do something today, but the volume is low. So I'll come back to it later, but we need to see some more volume first to be convinced that's going to move. So nothing on our existing watch list looks that fantastic. Let's take a look at what else is moving. Let's see. I'll look at that in just a moment. So, well, I can look at it now. BAER, sure. That does look okay. So we've got that trading up 80% on 6 million shares. So that definitely fits our bill. So let's go ahead and add that to our radar. BAER. Next up is the possibly LLAP. I don't think so, but let me check. Oh, sorry, that's the New York. That's the NYSE stock. Never mind. Can't look at that one. Sorry, that's the wrong exchange for that particular stock. Let's see. NKTR, perhaps. Yeah, this stock is down 37.84%, trading 836,000 shares. Based on the pace it's going now, it might be able to get past 1 million shares by the open. I'll put that as a potential. I won't say that I want to watch it yet. I'll reevaluate it during the start of the coaching session. If it still looks good before the opening bell, then I'll go ahead and add it. For now, not sure. All right, CING. Yeah, that's currently up 65.77% on 8.2 million shares. Definitely fits our criteria. Doesn't even look like the stock was active in the past, so that's good. So I'm going to add that CING to our pre-market radar. And it looks like that's actually it. I will mention AKBA. It's under $1, but it did briefly trade above $1 in the post market. It got to 101. So this one I will also keep an eye on, but I will not add that to our pre-market list. And then let's see what else we got. ON. Well, ON I think is if that's what you're asking about, Bruce, I believe that's a New York, that's NYSE stock. Not, no, actually no, it's a Nasdaq stock. Never mind. Let's see. Yellow. I don't know if it looks like it's going to do anything special. It has some volume, but not a lot of price movement. So I wouldn't put this on the radar for the open. I'll just say that if it turns out to be one of the leaders of the NASDAQ, we'll see it anyway. So for now, I'll just say it could be something, but I don't see the movement that I want to see pre-market. So for now, I would say I'll skip it, but I'll put that down as another one to just keep in mind, but not to necessarily watch at the open. All right, so as far as economic data is concerned, we've got new home sales coming out in an hour. We already had core PCI price index came in better than expected, well, at least according to what the numbers say here. Personal incomes came in worse than expected, personal spending stronger than expected. Now, the consumer personal spending is a number that definitely will be interpreted poorly by the market because that does mean that if people are spending money, it implies that the economy is going well. So that would, of course, give the Fed less incentive to slow down the interest rate hikes. Core PCE price index is higher than expected, which this interprets as good. However, I think in the current context, this could be interpreted as bad because we're, I think any number like this will probably have a negative impact on the markets because it's better than what was supposed to happen. But in the current situation, better is not good for the market. So in short, these numbers have a negative impact so far today. If you look at the NASDAQ and the SPY, both are falling sharply, implying that we've got, basically, we've got a lot of negatives off of that news. So, in short, that's where we're at. All right, folks, I'm going to jump into the coaching room right now. For those of you who might be watching this who are not part of our program, be sure to check out fundertrading.com. and learn more about how we fund traders to trade stocks. Okay. Other than that, folks, see you in the coaching room in just a moment. Take care.